Hello, everyone, and welcome to our latest episode of Market Bites. It's the 26th of November. We've just had the US cash open at the time of recording, and I'm joined by two wonderful guests. We've got Neja Malk and Brett Kenwell with us today. Neja, I'll come to you first. How are you doing?
Yeah, pretty good. I mentioned before that my day started very early today at 3:30 because my baby refused to sleep. So I was saying that I should start following Asia markets more closely because it just makes sense. I'm up anyway. How are you
Yeah.
guys?
Yeah, no, I'm not too bad. Yeah, you'll have to start looking at Asian market strategies for the Nikkei and the Hang Seng and the Japanese pairs. You're going to become an expert in it all soon, I'm sure. Brett, how you doing, mate?
I'm doing good. My day didn't start as early as Neža's did, but I'm trying to play catch up with both of you now.
Yeah, well, it's good to have you both with us. I think it's always an interesting time in markets. I think 2025 has been that, but it feels as we're a month away from Christmas. You've got Thanksgiving tomorrow. You've got the Fed decision in a couple of Wednesdays time, or maybe I think 14, 16 days, whatever it might be, 14 days I think. So we're entering a point now where it's like it's the business end of the year, so it's quite an interesting point. People will be thinking about what to do for next year, how to maybe rebalance portfolios as we go into the back end of the session. And we wanted to focus on Google, which for those listening or watching on YouTube, you'd have seen and heard about Google doing incredibly well recently. We'll talk a little bit about Google and versus Nvidia as well. Last couple of days, Nvidia's come under a bit of pressure. I think it's on course for its fourth red week in a row after a solid earnings. Let's not forget last week. And then we'll talk about just the current state of the markets, the sell-off that we had from last week. The Nasdaq has fully recovered that as of yesterday's close. Does that continue, or is it a moment where the sellers come back in again? So we'll discuss all of that, a little bit about pullbacks and that kind of thing. But Brett, Neja, that sound good to you?
Yeah,
Of course.
sounds great.
Perfect. That's the answer I wanted to hear. Neja, we'll come to you first on Google. It's been on, as I mentioned, an incredible run. Actually, funny enough, about 25 minutes ago, I had a voice note from a friend of mine, and I'm not going to say their name. They're private security for an ex-prime minister, so they love that job, but I can't name their names. And they go, "What on earth is going on with Google? Surely names like this can't just keep going up forever." Um, what are your thoughts on Google at the moment? I'm not going to ask you to tell me where it's trading in 10 years, but looking back at the last few months, it's been on fire.
Yeah, because actually, if what makes it interesting, I think it's the timing, because we've been saying for the past few weeks that this AI trade might be under pressure. We saw how choppy tech stocks can be, and meanwhile, Google just quietly climbs to new all-time highs. So it surprised a bit. But when you zoom out, actually you can see that Alphabet is the strongest performer among all Magnificent Seven this year. It's up like 70% in 2025 so far. And actually, I saw one infographic today that mentioned that that Alphabet contributed the most to SP 500 gains this year, even more than Nvidia. I don't have a picture right here, but yeah, it was surprising for me because if we take a look at other SP 500, other Magnificent Seven companies like Microsoft is up low double digits, and some of other names are mostly flat. So outperformance of Alphabet is actually huge, but there are some drivers behind this growth. I would say I think that this sentiment shift already started at the end of summer when this lawsuit about search monopoly was ruled mostly in Alphabet's favor. Maybe you saw some news about it, but there was I think that negative sentiment for the past year came mostly out of this lawsuit, but it's finally resolved. But also there were some other positive news that kind of pushed Alphabet higher, I would say. And first one could be credibility in AI. Because, I mean, ChatGPT, when it was launched, everyone was saying that Google is behind, that Google search, it's not useful anymore. But with Gemini 3, I think that narrative completely shifted. I don't know if you saw, but Gemini 3 is basically integrated in everything right now. You have it in search, Chrome, YouTube, Maps, everything. And billions of people use that every day. I don't think that any other AI company have this type of distribution. And also there is a hardware story, because Gemini 3 model was actually trained entirely on Google's own TPU chips. And that means that Google is not relying on Nvidia anymore. So they're building their own models and inside their own data centers and inside their own cloud. So it is fully integrated system. And yeah, you also, I'm sure that you saw news about Meta, that they're in active talks with Google that to use their TPUs. So this is also huge. And I think that because all of that, market doesn't see Google now just as user of AI, but they starting to view it as actually AI infrastructure player. They put it close to Nvidia, Microsoft, maybe OpenAI in terms of the strategic importance. But of course, I don't think that everyone should just jump in without any analysis. It's not risk-free. Even their CEO in recent BBC interview, he said that AI market contains some irrational behavior. And also his message was clear that if AI cycle cools down, no company will be immune, including Google. So there are still some questions open around search monetization, capital spending, also regulation. So these are some things to consider. But for me, I think mostly positive about Google right now.
Yeah, Brett, what do you make of it all? Obviously, we had headlines over the last couple of days just about Nvidia. It's almost putting two giants next to each other. Nvidia versus Google. Google's gone higher, Nvidia's gone low in the last couple of days. What's your thoughts on all of that, and then obviously following up a little bit on what Nezha said?
Yeah, I mean, it's been so interesting seeing Alphabet's sort of arc through this whole AI revolution. Naja touched on it a few minutes ago about when ChatGPT was launched. The narrative was Google is dead, search will be crushed. I mean, this thing traded at a dreadful valuation. Like it didn't seem like anyone really wanted to own it. And that script has flipped completely upside down. And everything has really gone Google's way, really over these last few months from Naja also mentioned it, the antitrust ruling, even the news of Berkshire getting involved, I think was an exciting factor for investors. And now you look at it, the TPU, the AI chip component that they have going, they have Gemini 3 just launched with, Salesforce's Mark Benioff singing its praises. So it's like all of these things are going in Alphabet's favor right now. And that's really kind of come at the expense of Nvidia, which ironically just reported great earnings and had an excellent outlook for the next quarter, both on the margin and revenue sides, showing that not only is demand still strong, but pricing power is still there. So when you look at these two, I don't know if I think, well, I certainly know that there's enough room for both of them to be okay, but I don't know that it's necessarily a black and white situation or a zero sum scenario where, for every order that Alphabet gets for its chips is necessarily a huge, comes right out of the pockets of Nvidia, I suppose, is what I'm trying to say. And, it's really interesting watching this dynamic changes with Alphabet specifically, just going from sort of zero to hero in this AI race. It will be interesting to see how it plays out over the next, 2 to 4 quarters, and where we are basically a year from now is it supplying, a bunch of these other Magnificent Seven names with its chips, but at the end of the day, the demand is still there for both of these stocks and both of these products. So it'll be interesting to see really how it kind of plays out and moving forward.
Yeah, it doesn't necessarily feel like this is the end of the road for Nvidia all of a sudden, is it? I mean, Nvidia,
No.
incredible company, done fantastic. And, there's always going to be short-term noise throughout different weeks and months and whatnot. Just going back to something Nesha was mentioning there, just about the Gemini coming out and it being amazing and Gemini 3, this, that, and the other. But what I think is quite telling. And Nezha, you might remember we talked about this in one of the January episodes when it was around DeepSeek, and
Yeah.
we all made the point, from a user point of view, it doesn't really matter. Like, who cares which one you're using, which AI model or whatever? For people out there, just normal people that want to use AI models or search engines, whatever, you're going to use the best one. It's winner. It doesn't matter. It's great for us. It's great for the user. So I think this is fantastic in terms of Google's recovery. It's done amazing. I mean, if we go back to where it briefly made an all-time high in January, it dropped. I think it was like 33% into those April lows. And yes, a lot of stocks bottomed in April anyway. But since that, it's up to its peak, which was earlier this week. It's up 133%, which is remarkable. But it got me thinking when I was looking at the chart yesterday, just about how to play these big names. And what some people do, of course, is just wait for those pullbacks. And it could be that you wait for a certain number, and it could be 25%, it could be 20% where it officially is in a bear market, or you go for 30%, or you use something like the 200-week moving average. And while Google didn't actually quite hit it in April, what you call some people would start to do is averaging as price gets to that point. The last two periods where Google did hit its 200-week moving average was March 2022, and then it rallied again, sort of 133%, and then COVID as well, where it then rallied before coming back down 199, 200%. And I'm just having a quick flick through now on the screen. People won't be able to see it, but have a look at your own charts just in terms of those 200-week moving averages for some of those other big names. And it's quite interesting just to see the reaction across the board. Many of them at some point have had quite a nice move from there. It's not always going to be perfect. For example, I'm looking at Tesla now, and it dropped below its 200-week moving average in March, but only by what was 15%. And then since the 200-week moving average got hit in March, it then rallied up 91%. So the risk reward is there, especially if you believe these companies are going to perform well. And then also on that, for Tesla, just as an example, if you bought Tesla right on October the 21st, no, the 25th of October 2021, and let's just say you bought $1,000 worth, you'd now have $1,000. It hasn't moved, but by buying those dips, dollar cost averaging in, it's done pretty well. And it's something that I think people do consider, that sort of pullback opportunity. Another big company, Apple, one of the Mag 7, hit its 200-week moving average on the 31st of March. It went 5% lower, so 5% lower, and it's now up from the 200-week moving average 55%. Is that something you two consider, Brett? I know you look at charts not too dissimilar to how I do. Is that something you have marked up, or even the 200-day moving average?
The 200-day, obviously, it's a key one, but your mention of the 200-week is, to me, vital. I mean, for long-term trending stocks that have done very well over the years, that's sort of the pullback level that you really pay attention. And when you get there, it doesn't happen very often. I know for like something like the S&P, when you get down to the 200-week, some things are really going on in the market to shake things up. But more times than not, it does prove to be a better buy than a sell, certainly, and it certainly fits for these Mag 7 names. I think the only thing I would add, and I know just off the top of my head, thinking I was looking at Microsoft's weekly chart not too long ago, that was a very near touch of the 200-week back in April. So to your point, it's a key area, but with the Mag 7, we see this rotation all the time where there's this one or two or maybe even three stocks in this group that are completely out of favor with the market. And we've seen it with really all of them. Tesla, Amazon this year was a dog. Meta right now is sort of, brushed off to the side. And then they come back to life when these companies prove their resiliency, when the growth is still there, when the valuation just gets too compelling for investors to pass up. And we inevitably see a move like we've seen in Apple over the last few months. We see a move like we've seen in Alphabet or Microsoft earlier this year when it went to 550. So, we see that rotation quite often.
Yeah, we do. We do. Nezha, when you're in a position, and I think this is a question a lot of newer investors would like to know. If you're in a position and it's gone well, you bought low down, whatever stock, whatever instrument, whatever ETF, whatever, it doesn't matter, and things are going well, but you still really believe in it and you're looking to hold for the super long term. Do you are you one of those investors that once you buy in, that's the only time you buy, or do you look to also average in should there be, like a 20% drop or something like that, or is it all, on the valuation alone and nothing else?
Yeah, it's a tough call because I try to look entirely on valuation because when you see your position is up, I don't know how many percentages, but you are happy, but at the same time, you are also kind of nervous. Should I cut my position a bit? Should I restructure my portfolio just a bit? I mean, it's always a tough decision, but I mostly look at valuation and see and try to see is there any other opportunity on the market that I should take where I see more growth prospects, and maybe I should take this opportunity, or I should continue and stick to these investments. But anyway, if my position grows too big for my portfolio and too big for my risk tolerance, I try to trim it a bit. And it happened for me with some of Magnificent Seven companies before. For example, I also invested in Meta when it was at its lows in 2023. And no, I didn't go to their all-time highs. I completely cut my position before that, for example, because of valuation. Yeah. And maybe some people would say that I regret it, but anyway, you should stick with your own opinion and with your decision. When you decide to sell, you decide to sell,
Yeah.
and you should go with that.
Yeah, I agree. But what a great problem it is to have when a stock gets too big for your portfolio. I love that.
Yeah, but
Actually, God, sorry.
sweet problems, right?
Yes, no, absolutely, absolutely. And speaking of Meta, by the way, it was down at last week's low, 27%, and it's now from that low up 9% already. So again, that sort of sweet spot, 25, 30%. Be worth looking into the stats on that. Right, let's go to our next subject, Brett, the current state of markets. And the reason I said the exact time when we did this podcast at the beginning is because things can change very quickly in the market. It could take one comment from a central bank speaker, from a Fed member, and suddenly the market's 100 points higher or lower. But how do you feel about things as of right now? The pullback we saw last week into the beginning of this week, and then the recovery, is that just one of those things that happen, or is there something under the bonnet that maybe worries people a little bit more? How would you see it?
Yeah, I think to your point, markets move so quick. I mean, we've seen, at going into the end of last week, it felt like things were starting to kind of fall apart a little bit. And then 3 days later, the Russell's up 7%. So things can move so quickly, and it really just takes a little bit of relief, I think, to really push markets back higher. I think that generally speaking, the markets can handle bad news pretty well. It's when there's too much of it at one time is when people get uncertain, they lose confidence, they sell first, ask questions later. That type of sort of rhetoric. I mean, when we look at where the S&P is right now, sort of at the peak to trough type of pullback, it's like 5 to 6%. That's on average we get 3 corrections a year in that ballpark. So this is fairly routine so far. That doesn't mean it can't get worse, or we can't, see something like a 10% correction, or even something a little bit deeper. But I think for me, it just is really a question of, when uncertainty rises, volatility rises too. And you go back 6 weeks ago, to the end of Q3, really, it was like we had that record long government shutdown that wasn't really in the cards at the time. The legal standing of tariffs. The Fed had just recently cut rates and said we expect to cut 3 times this year. And we've seen a lot of that shift now. There's these questions of what's going to be the end game with tariffs. Are they legal, illegal? Which ones will stay? Which ones will go? The Fed has pumped the brakes a little bit, at least try to temper expectations that they're going to cut in December. I think that's got some investors on pause, and you look at sort of these short-term factors, and I've had any economic data for 6 weeks just about, so there's all these moving parts, and it's got investors really, I think, questioning things. And while the S&P is only down a little, under the surface, there's a lot more pain. I mean, the Mag 7 alone, it's not hard to find a few of these names that are down 15 or 20% from their highs. These are big names. These are multi-trillion-dollar companies. So to take a 10% hit on their market cap, it's pretty big overall when you look at it from an index perspective. So I think it's really just this pullback is just uncertainty from what's going on right now, and sort of how that's going to affect the holiday season, and sort of the trade through the rest of the year. But generally speaking, the foundation, the building blocks of this bull market are still in place, I think, whether that's AI, whether that's earnings growth. For now, the economy and the consumer are holding up. There will be questions about that, I think, as we push through the rest of this year. But, I think I'll just end it by saying, when you look at the earnings, which is really the backbone of any bull market, this last quarter expectations were for 7 to 8% growth. We came in at 15%.
Yeah.
The earnings beat rate was the highest, it matched last quarter, but it was the highest we've seen in a couple of years. So, and it's expected to accelerate in 2026. So the main foundation is there. It's just a question of, will we resolve some of these talking points in the short term?
Yeah, it did feel like an overall pretty solid earnings quarter. And actually, just on the consumer, I thought it was quite interesting. And I suppose anyone who is an investor in Abercrombie& Fitch will already know this, but they reported their earnings out yesterday and had, one of their record quarters from a sales point of view, and they jumped 37% because of it. And I thought that was quite interesting. If you were bearish in the market, you thought next year was going to be a struggle, those sort of names you wouldn't really want to see have record quarters. And they did. So I think under the bonnet, there's obviously always going to be these issues. But if you were to sit down and write down and think about all the positive elements of this market and how it could maybe continue to go higher next year, there's a few things on there for sure. Neja, for you, sentiment-wise, I mean, listen, it now looks like the Fed are going to cut in a couple of weeks' time, which is great. Do you feel sentiment-wise we're in a nice place at the moment, or are you unsure?
I think that we are in better place than we were a week or 2 weeks before, when the markets were also choppy. But I think that we got some relief finally. But I was just looking at performance of different sectors in November so far, and healthcare is outperforming all other sectors. I also saw that hedge funds are massively investing in health sector, and I think that as us investors should be also on a watch for different opportunities in other sectors outside AI. For example, also Eli Lilly, which is a major healthcare company, it rose to 1 trillion market cap just recently, and it's up 35% in 1 month. So some of those names are definitely worth watching, at least from my opinion. And the market is really focusing on AI a lot, but there are also good performers outside the sector.
Yeah, definitely. I kind of remember, I think we were halfway through the year and we did like an episode where it was like a half year wrap. And I think at the time, correct me if I'm wrong, one of you, or if you can't remember, doesn't matter, but healthcare was one of the worst performing sectors at one point this year, wasn't it? And, it just goes to show that even in, poor first 6 months of the year, things can recover into the back end of it, and that's when sometimes those opportunities are there. And those AI names that dominated the first half of the year, for those people that took profit there, rotated into those positions, now are sitting on a phenomenal year. But it does go to show you've got to be able to react to things. I'm just looking at Eli Lilly's chart now, just remarkable really, from those August lows to the high that we had this week, 78% since the beginning of August. I mean, that is just,
And that's a big name too.
big name.
Yeah.
Big. Big name. Listen, we'll wrap it up on that. I'm just crying that I didn't buy Eli Lilly on the 4th of August when it retested that previous high. But Brett, pleasure as always. It's great to have you on, and great to have you on together. So thank you very much.
Thank you, guys.
Always a pleasure.
Bye bye.